Hi guys, welcome to my channel. So before we get started, make sure to hit that like button, also subscribe to my channel. Today, we will talk about how to apply for a personal loan. A personal loan is money that you borrow for just about any purpose, including debt consolidation, an unexpected medical bill, a new appliance, a vacation, or even a student loan. You pay the money back, including interest, in monthly installments over time, usually 2 to 5 years. Most personal loans are unsecured, meaning that they are not backed by collateral. The interest you pay is expressed as an annual percentage rate, APR. The average APR on a personal loan is 8.73% as of May 2022. But it can range from 6% to 36% depending on your creditworthiness, including an examination of your income, debts, and credit score. You can get a personal loan through a bank, credit union, credit card issuer, or online financial lender. You can normally apply online or in person and will have to provide some basic personal and financial information. Your lender will consider your employment status, income, outstanding debts, and overall credit score to assess whether you are eligible for a loan and determine the interest rate that you will pay. How to qualify for a personal loan. There are many steps to take to qualify for a personal loan, with the first being to make sure that it's right for you. For example, if you want to borrow money to remodel your house or buy a car, a home equity loan or an auto loan may come with a lower interest rate. Unlike unsecured personal loans based solely on your creditworthiness, these loans are secured by the home you want to fix up or the car you want to buy. Although paying for a family vacation or consolidating debt fits into the personal loan category, you also may want to check into a 0% introductory APR credit card. But if you go that route, be sure that you can pay off the balance before the 0% rate expires. Things to consider before applying for a personal loan. Before you either start shopping around for loans or begin to work out how much you would like to borrow, there are a number of important considerations you should make. First, make sure you understand how loan providers express the cost of a loan so you can make sure that you have the ability to pay it back. There are a number of online calculators that can help you to work out your actual monthly payments. Make sure you consult them when you are shopping for loans. Though personal loans are typically a fairly cheap way to borrow, you shouldn't overlook other sources of cash. For example, you can borrow against the equity in your house or put an expense on a credit card if you are sure that you can pay it back quickly. What documents are required for a personal loan application? Each loan provider is different and may ask for different documents as you apply for a loan. On the loan application itself, you'll be asked for your social security number, address, and your income. You will also normally need at least 3 documents to apply for a loan. Proof of identity, such as a driver's license, passport, or state-issued ID card. Proof of your income. You may need to provide pay stubs, tax returns, W-2s, and 1099s, bank statements, or your employer's contact information. If you are self-employed, the loan provider may ask for bank statements, 1099s, or tax returns. Proof of address. You can use a utility bill or your rental agreement for this. If you don't have either, you might be able to use a mortgage statement, voter registration card, property tax receipt, or bank or credit card statement. In addition to this basic information, your loan provider might ask you to provide the details for either a consignee or the purpose of the loan. Decide how much to borrow. Remember that when you borrow money, you don't just pay back the original loan. Except for that 0% card, paid off on time, you also pay interest or rent on the money you borrow. There's no reason to pay interest on the money you don't need, so only borrow what is necessary. On the other hand, if you borrow less than you need, you may be forced to turn to more expensive loan sources at the last minute. Finally, make sure you can afford the payments on the amount you do borrow. There's nothing worse than overextending yourself financially if the best thing would have been to wait a while until your finances improve. Check your credit. As personal loans rely heavily on your creditworthiness, check your credit scores and obtain updated credit reports from each of the 3 major credit reporting agencies, Equifax, Experian, and TransUnion, before you apply. None of these actions, referred to as soft inquiries, will impact your creditworthiness or credit score. That only happens when you apply for a loan, and the lender makes what's known as a hard inquiry. You can obtain a free credit report from each of the major reporting agencies once per year by visiting annualcreditreport.com. Many credit card and loan companies provide a free monthly credit score from one or more of the major credit reporting agencies. Services such as Credit Karma offer free credit scores, credit reports, and other financial services. Some, like Credit Karma, are actually free. Others offer a free trial and then charge an ongoing fee. You can also pay for your credit score from credit reporting agencies or other online vendors. Offers vary by lender, but the information above may provide guidance about what to expect when you apply for a personal loan. Additionally, a personal loan calculator can make it easier to determine how high of a monthly payment you might end up with based on your credit score. Know your rights under Regulation Z. In 1968, the Federal Reserve Board, FRB, implemented Regulation Z, which in turn created the Truth in Lending Act, TILA, designed to protect consumers when making financial transactions. Personal loans are part of that protection. This regulation is now under the auspices of the Consumer Financial Protection Bureau, CFPB. Subpart C sections 1026(17) and 1026(18) of the TILA require lenders to disclose the APR, finance charge, amount financed, and total of payments when it comes to closed-end personal loans. Other required disclosures include the number of payments, monthly payment amount, late fees, and whether there is a penalty for paying the loan off early. Where to obtain a personal loan? Personal loan sources are divided between 2 main categories: those with a banking license or charter and those without. The main distinction between the 2 categories involves regulation. Banks and credit unions, institutions with a banking license or charter, are governed by the Federal Reserve, Federal Deposit Insurance Corp, FDIC, Office of the Comptroller of the Currency, OCC, and National Credit Union Administration, NCUA. Local banks and credit unions are the first places that many people think of when contemplating a personal loan. If you apply there, you will likely meet face-to-face with a loan officer, the experience will be personalized, and the officer can guide you through the application process smoothly. Compared to other options, banks tend to have higher loan qualification standards. If you are already a customer, the bank may cut you a break in that area though. The credit union qualification process tends to be less rigid than that of banks, and interest rates there are typically lower than at banks. However, you must be a member to do business there. Neither banks nor credit unions typically charge loan origination fees, which is a plus. Non-banking financial institutions, NBFIs. Sources without a banking license are known as non-banking financial institutions, NBFIs, or non-banking financial companies, NBFCs. The main difference in terms of services is that NBFIs cannot accept deposits. NBFIs fall under the 2010 Dodd-Frank Wall Street Reform and Consumer Protection Act and are under the supervision of the CFPB. NBFIs include online and brick-and-mortar finance companies, insurance companies, peer-to-peer, P2P, lenders, payday lenders, and other non-bank entities. Finance companies typically charge higher interest rates than banks or credit unions, but they may approve you for a loan when a bank won't. P2P lenders may offer low interest rates if your credit is good, but much worse rates than banks if you are considered a credit risk. Payday loans are notoriously bad loans, charging high interest rates and often hidden fees. Check your eligibility. Visit lender websites or make phone calls to determine if your financial profile makes you eligible for a loan from that lender. Find out if there is a minimum required credit score and whether there is an income threshold. Determine if there's a required minimum length of credit history. 3 years or more is common, and what is considered an acceptable debt-to-income ratio. Compare personal loan rates with our partners at Fiona.com. What do you think of our video? Let me know in the comment section below. Thanks for watching my video.